Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba and thanks for joining me. Tonight I'm joined by Thabo Ncalo, portfolio manager at Stanlib, and we'll be looking at the Zambian market. Thabo, Zambia. Touch on a little bit the structure, the economy, what's economic performance been like, your view on it as an economy?
Yeah, good evening, Tshepo. I mean, Zambia is a pretty interesting market.
Right.
I think the first thing to kick off with on Zambia is just its reliance on copper. Right. I think it's known as a market throughout the world, or a country that produces copper,
yep, and
it obviously exports it to markets such as China and so forth. Now, we've seen over the last couple of years, the copper price, particularly since the beginning of 2014, the copper price has come off quite a lot, you know, from the $7 to call it, $3 even, or even something.
Yeah, now two something, right?
Exactly, yeah. So you can imagine how much that affects the Zambian economy. Yeah. I mean, if you look at the Zambian economy as a whole, you want to take a breakdown. I mean, the major sectors there would be your mining sector, which is obviously copper, the agriculture sector, which is quite strong, and of course general services, which is also another huge chunk. So you can imagine, this is an economy that depends on both agriculture and copper. I mean, the copper price doing what it's doing, it's had the economy slightly, but it continues to grow quite well.
So what sort of GDP growth are we seeing coming out of Zambia?
Yeah, so I mean, at the moment, I mean, the forecast for this year, for 2015, is about 6%.
Right.
Last year, we saw it come off a little bit to about 5.7% or so from the previous year, which was about 6%, 6.5%.
So still a reasonable growth.
I mean, growing at 6% is still pretty good, Right. But of course, that comes on the back of what happened last year with the fall in the copper price. Yep. So from that lower growth rate, I mean, I think we expect that economy to grow a lot faster. We expect it to grow, in excess of 7% and above. Also to be growth that's going to be more inclusive and create more jobs, which is another huge target the government has had in Zambia.
Right. And with the copper price pulling back, have we seen a decrease in production from the copper mines in Zambia?
Well, it's been a bit of a double whammy as well, because the government decided to change the royalty laws in
worst timing.
At the worst time, so you had even production falling quite aggressively over the last year or so, as this issue has been in negotiation. It's finally been resolved, and the government has agreed to sort of go back to the old regime post what they started doing at the beginning of this year. So I mean, that's been a bit of an issue where the production. But if you look at the production in total, from call it a decade ago, the copper production in Zambia has risen quite sharply over the last couple of years. It's just this last blip over the last year, obviously based on both the price and then of course the issues around the royalties, etc.
Right. So I guess going forward, if one assumes that the global economy recovers, it sounds like Zambia is fairly well positioned to have fast economic growth.
Look, there are two things with Zambia. I think Zambia is going to continue to grow quite well. The other important thing with Zambia exports quite a lot of stuff to the Democratic Republic of Congo. Right. So obviously being neighbors. So some of the growth in Zambia, for instance, the cement sector has been one that's been quite interesting over the last couple of years. We've seen now Aliko Dangote opening and commissioning a plant in Zambia just a couple of weeks or so ago. Right. And that's a 1.5 million metric ton cement plant. Wow. Coming to rival, the producer, the main producer, which is Lafarge, Lafarge Zambia. Yeah. So, and most of this cement is going to spill over and go into the DRC, into other neighboring markets. So the question of recovery in Zambia is one of both what's going to happen in neighboring states, particularly what's going to happen in the DRC post their elections, and of course what's going to happen with the copper price and how well they can do diversifying that economy, which is something we want to quite see. We want to see the Zambian economy moving more and more towards a more diverse economy than just a single reliance on both copper and agriculture.
Right. So if we now delve down, so we started out at the economy, if we delve down to the market itself, your sense of the markets, are there opportunities, are there interesting type of positions for investors? You touched on Lafarge a little bit. I know that's one of the primary listings.
I mean, obviously from our perspective, you look at the Zambian market, it has a little over 20 stocks, 21, 22 stocks. Right. So it's not a huge market. Even from a size perspective, it's I think it hovers around just below $5 billion in market cap. So it's not a massive market by...
so potentially liquidity is an issue.
Liquidity is definitely an issue for most of the names. So out of the more liquid names, I mean, you look at the banking sector, for instance, which would include Standard Chartered, which is obviously a big global brand. So that subsidiary is listed in Zambia.
And this is specifically the Zambian offering of
Correct, yeah. That's a Zambian business that's listed on that market. And you also have another big bank, Zanaco. So on the banking front, I mean, you know, I think you'd want to sort of dissect that market by, you know, various sectors. But on the banking front, I mean, we're still a little bit concerned with regards to opportunities there. I mean, a bank like Standard Chartered Bank has been well run. You know, it belongs to a big global brand. So I think that's always a stock that always remains on a lot of people's minds. That also certainly on our radar. And Zanaco is also an interesting stock, you know, from a local banking perspective. So the banks are still very interesting, although they're a little bit expensive when you compare them to other peers on the continent. You know, even Standard Chartered is trading well above a 4 times book. You know, and that's quite rich.
Now the structure of banking in Zambia, is it fairly well developed? What's banking penetration like in the market?
Look, the penetration is obviously it's similar to what you see on the African continent, where you want it to go higher and higher. I mean, the banks are still sort of, I mean, you look at the loan book for Standard Chartered Bank as an example, about 40% of it is in retail. And there's still quite a bit of exposure to agricultural sectors, to other sort of corporate sectors, real estate, construction, etc. So, you know, the banking sector is starting to make inroads, particularly into what we want to see, you know, a higher concentration of the retail sector, you know, banking people, actually giving out loans for homes, for consumer loans, for all sorts of things, education loans. But that's something that still hasn't really reached the pinnacle, as it were, and we're still sort of climbing on the way to get there, I think.
And in terms of profitability, are we seeing quite nice return on equities?
I mean, unfortunately, the return on equities have come off quite a bit over the last couple of years. I mean, it's also largely been a result of what we've been seeing from the pressures in the banking sector. So, I mean, ROEs, I think even for Zanaco, are now coming to about 15%, which is obviously relatively low compared to, you know, other peers across the continent.
Especially taking into account the price to book.
Exactly. For instance, I mean, Zanaco is obviously a little bit lower. It's just under two times book. Standard Chartered is the one that's obviously a lot highly rated. But you know, all these pressures still exist in the market. You know, you still have a situation on the banking front where there's a cap on the lending rate, you know, on how much the banks can charge. And at the same time, there's been, you know, you've had a lot of, had interest rates in Zambia going up. I think the monetary committee decided to leave the rate at about 12.5%, which is still relatively high, you know, in Kwacha. And we've seen that all that pressure filtering into the liability book of these banks, but they're not able to pass it on, you know, fully as they would like on the asset side because of this cap that exists. So profitability will still continue to take a bit of a knock. But I mean, I think over a long term, I think it's a matter of watching the right banks, the banks that have the lowest NPLs. For instance, in our case, we would prefer something like a Standard Chartered because of you know, the way the bank is managed, those NPL ratios that are way below 1.5%, etc.
Okay. Any other sectors that are quite interesting? I know breweries, there's a few breweries on listed.
Look, breweries remain interesting as well. Unfortunately, you know, I mean, I think my narrative today has just been about more of the headwinds than anything else that are going on. And the brewery sector is also struggling a little bit. We have a situation now where there's the government imposed, you know, higher excise duties on importation of certain beer, inputs. So, you know, and all these excise duties have essentially started hitting the, you know, a stock like, for instance, Zambian Breweries, which is a subsidiary of SAB Miller. And of course, you know, from that perspective, we've also seen volumes coming off quite a little bit, especially volumes in lager coming off because of the higher pricing. At the same time, you're getting hit by an economy that's slowing down a bit, where the consumer is not able to get as much because of the slowing copper price. You know, you've got the kwacha that's now depreciated by close to 40%, and that affects inflation in the country, etc. So, you know, the breweries are going to struggle a little bit, but I think, you know, beer and some of the beverages are also like sort of your mainstay products that you can bank on over the long term.
You
saying
hope
over the short term.
People keep drinking beer.
People drink, yeah, I mean, I think they might drink less of the same beer, but certainly people still continue to consume a lot of alcohol throughout the periods.
Thankfully for investors, right? You touched a little bit at the beginning on Lafarge, your views on the stock. Is the additional competition going to be an issue going forward?
I think, you know what, it's an interesting one. As I mentioned, the new Dangote cement factory just commissioned is going to bring in 1.5 million tons of cement. To
sell into DRC or specifically into the Zambian?
Well, I think, you know, the fear has generally been that that market will be oversaturated now with Dangote coming in. But you know, the greatest opportunity lies in the two manufacturers, the two main manufacturers selling their cement into the DRC as an example.
Right.
So export markets are key for that industry. I mean, we've seen now Lafarge post the, you know, Dangote coming in. They've also now building a new plant, which I think will be commissioned.
So even more production.
More production coming on board. And I think they were at about 1.9 million tons.
Right.
So add 1.5 million tons from Dangote, and they're commissioning now bringing on board another 1 million tons.
Right.
So it's going to be interesting to see what's going to happen from an oversupply perspective. The biggest fear is price, of course. You know, and we've seen, you know, all these price increases in Nigeria when cement is flooding the market, you know, affecting the, you know, the prices of cement.
Right.
So that's another big challenge I think the industry still has to face over the next few years.
And I guess the key then is, can you offload some of that supply into DRC? And you touched on the elections there, and hopefully the infrastructure development that we've seen in DRC continues.
Correct, yes.
And from a margin perspective, is it a healthy cement margin country right now?
I mean, the margins are good. I think we'll see, as for instance, as Dangote comes in, you know, because that's going to change margins quite dramatically.
Right.
You know, that's going to drop pricing. So I think we need to sort of see once, you know, Dangote's productions hits the market, where margins are going to settle, you know, because as you can imagine, you've had Lafarge that's had over 65% market share, and they've called the shots to a large degree on what they can charge. So it'll be interesting to see what the normalized sort of margin is. The other problem you have in Zambia at the moment, which is something I guess I didn't mention, was issues of electricity. You know, they've been struggling quite a lot with electricity shortages, much like you've seen across Southern Africa. And of course, that affects the production of cement, the production of various inputs, you know, and that has the potential of lowering margins across various industries quite a bit going into the rest of the year.
And does that place something like a Dangote at an advantage because they're accustomed of dealing in an environment of electricity shortage?
Correct. I mean, the one thing that's also happened with Dangote is that they've put in, as part of their new plant, you know, a coal-powered power station, you know, to power the plant.
Right.
So they don't even rely on power coming from the grid. Right. So, I mean, I think as you correctly pointed out, you know, Dangote is used to operating in environments that they have to power their own plants, you know, and I think that they can tend to, or they'll tend to benefit quite a bit more than the other people who are not as prepared for some of the power cuts. Yeah.
Perfect. Let's leave it there. Thanks to my guest, Thabo Ncalo, Portfolio Manager at Stanlib. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, goodbye.